Welcome to Retail Retold, the stories behind how that store landed in your neighborhood. I'm Chris Ressa, in conversation with the people and stories shaping retail and real estate. Brought to you by DLC. Welcome to Retail Retold, everyone. Today I'm joined by Brin Snelling. Brin is a Forbes contributor and in strategy analytics for Retail Union. I'm excited for her to be here. Welcome to the show, Brin.
Thanks. Really appreciate the time. And I'm glad to be here.
So glad to have you. So Brin, tell everyone a little bit about who you are and what you do.
Yeah. So my past work experience is always on the tenant side. So I worked for Bonobos and WeWork. I currently work for Retail Union, which is a retail advisory firm where we help build data-driven real estate strategies for brands. And my role is really on that data side. So I take data from clients as well as third-party data and build those real estate strategies. And then our team goes out and implements that strategy.
Amazing. And is there a store that is open now that is near and dear to your heart because you had worked on it for so long on an analytics, either at Bonobo or maybe a strategy at WeWork or something you're working on now?
Yeah, I mean, I helped open over 40, 50 stores at Bonobos. So a lot of the ones that are open are ones that I was part of. And then at Retail Union, we work with clients like Rowan, Purple, uh, Bonobos as well, Interior Design. So we've been involved in a lot of those.
That's so cool. Um, so when you're looking at so walk everyone through, what is that? We hear all these terms today, analytics, third-party data, and using that to drive real estate insights. What does that all mean? What are you doing? What is Brin doing?
Yeah, I mean, I think it's really changed. It's become very unique in that we have e-commerce first brands that have a ton of customer data, so they know where their customers live. And we're able to take that and tag it to demographic data and actually show them where their customers are and also where they shop. And then we also look at the shopping centers and look at the trade area and the people that go to those shopping centers. And we're able to say, hey, like 80% of your customers shop at this location. And so there's really a way to connect with you that is quite impactful for building retail real estate strategies and deciding where to open locations. But there's certainly a lot of opportunity, I think, for more brands to use it.
And that's super helpful. You mentioned where the customers are. One of the things I was always wondering in some old school real estate is I'll use a LinkedIn term, is lookalike audiences. A lot of DTC brands, they figure out all right, a lot of our customers here, this is a good market to penetrate. And here's the suburbs in that market or whatever it is that we're going to penetrate. Do you ever do stuff like, hey, I'm going to use two random markets, right? Our top customers are in Vancouver, and we're going to open up some stores there, but I don't know, Charleston, South Carolina's demographics and people are just like this. They just don't know us there. So that's a good spot to open up a store. Does that ever happen in white space?
Yeah, a lot of the time. Mhm. And usually what we'll do is both. Usually we'll test out a market where we think, hey, there's a lot of potential there, but maybe you don't have the brand awareness and see what happens. And we actually find some of our clients do incredibly well in those markets just because of, to your point, we've identified that the customer is their customer and that there's a lot of opportunity. And sometimes it's just that, there's nothing like them in the market. Maybe there's no mattress store that exists there, that sort of thing. So certainly it happens, but obviously the safer bet is to go where your existing customers are. And then I think as you get more into your expansion plan where you're at store 20, 30, et cetera, then you start to experiment into those smaller markets.
So I think a lot of people are always wondering, like, there's data and science, but there's also a human art to like site selection, market selection that doesn't show up. There's like anecdotal information. And where do you stand on the human component? Like, yeah, I know the data says this, but this is what the data doesn't get, especially in real
Yeah,
estate. It's such an old school sport. So,
yeah, 100%. So we start it with the data, and that's really the idea is that that's the, block, like the building blocks of our strategy, where we present that data driven strategy. And then our team that is well versed, they've been doing this for decades. Uh, a group of very talented brokers, they then can go in and say, we know that this center is doing incredibly well right now, or we know, there's no vacancy in this location. So there's no point in tackling that market at the moment. So obviously there's a lot of that goes into it as well.
got it. Um,
Yeah.
okay. Super interesting. I wonder, so tell us, we're at the holiday season here. We're going into 23. I say retail. I say 2023. What's first thing that comes to Brin's mind?
Well, one of the things I think on the big, like it's getting talked about a lot, is the fact that brands aren't getting, especially younger brands, aren't getting the investment or the funding necessarily as they would because of inflation. So I think going to 2023, something that is really top of mind is the fact that some of these brands might fall out and make room for, other ones to come in and take rent or take space in a lot of these set top centers that have incredibly low vacancy right now. We have a ton of brands that are on wait lists in Class A centers, and I think that there will be more opportunity for that in the next year.
Interesting.
Mhm.
So, if I understand what you're saying, and so you have some brands that are on wait lists, which is, I'll be honest, is near and dear to my heart. That there's wait
Yeah.
lists out there for spaces. It's been such a good year that there's wait lists. I dream about my team coming to me and saying, "Here's the wait list." Um, I do. So that's great. But what you're saying is you think there's going to be there's a lack of funding for some brands who are occupying spaces today, and therefore they might close some stores?
Yeah, close or even make the decision not to open,
Oh, wow.
when they were beginning to, just because of lack of capital. Unfortunately, that's just one negative side of 2023, but I think there's an upside to it as well, and that it's
Well,
gonna
from your space, I could see how it's opportunistic and you're hoping for a little bit of that. I think that's interesting. Because that could be a way for you to shake some trees to get some spaces that you might not otherwise get. So sure.
yeah.
Uh, what's number what's number two on your I say retail in 2023. What do you think?
Yeah, I think the other thing is that obviously we've seen a lot of retail brands, direct to consumer brands open locations in the past year, and I think it's become known as an incredibly valuable marketing channel, and I think that's gonna continue to be the case. I'm sure you've heard, obviously, like, paid media has become incredibly expensive, and a lot of CEOs that I talk to for Forbes articles, as well as clients, have said that, they found these locations have really helped them acquire new customers. So I think that's gonna continue to be a big reason that companies open stores in the next year as well.
Oh, we have a deck at DLC I'll send you called the Store One.
Mhm.
Um, uh, little fun play on the e-commerce versus physical, and
Yeah.
and one of the lines that you know, uh, I'm I'm not saying I created it, but I say it the most is online customer acquisition cost is the new rent. And this whole notion that online you don't have to pay rent, but if you look and we did a study of like mature retailers, and you looked at their customer acquisition costs, i.e. marketing, and their occupancy cost, and the combination of the two, and you look at that compared to a lot of like what were online only brands, the combination was less than just the customer acquisition cost alone of a lot of online only brands. And so, when I look at it and I go, it's so high, and I I chagrin at sometimes when we're talking about this, because I think it's just talking on the that like some brands are talking about opening stores for marketing and or experience, even though those are super important. I keep saying like, how about we're opening stores because it's where the profit is. It's the best place to make a profit because selling online, my wife orders 4 and returns 3. You make no money and pays no shipping.
Yeah.
And she doesn't have to pay for returns. And she does that a lot. You make no money when my wife buys that from you. But, and so, we keep talking about the store as like a place for paid media, a place of marketing, a place for connecting with consumers and the experience. I think those are all great. I keep waiting for the headline. I feel like one of the few are saying it. How about it's just a good place to make a profit? Why aren't we saying this enough? Because of how challenging last mile, reverse logistics, the customer acquisition costs, all these things to make a profit online. Why is no one saying like, hey, the entry point for an e-commerce, like if Brin and Chris want to open up a t-shirt shop, the cost of entry is a lot cheaper. We're going to open up a t-shirt shop online. But to scale, like you get to like over $10 million in revenue, like you start scaling and you're shipping to multiple markets, like profit, it's like, it's not about profit. It's about how do we grow market share? Worry about profit later. What about the store as a place for profit?
Yeah. No, it's true. And I think the challenge, but it's something that we've been really trying to figure out, is the challenge is how do you quantify the impact of a store? Because I think a lot of the times they'll say, oh, on a four-wall basis, it's not a low enough payback for us to justify the location. But there's a much larger impact that a store can have on other channels, right? On your wholesale channel or on your web channel. And I think being able to quantify that impact will actually open up that conversation more to say that we're actually driving profitability.
So my quick response to that is, my response to that to anyone would be, okay, but if you're, because of customer acquisition costs, if you're losing money every time you ship an item to my wife, well, then what are we talking about? Like, you don't like the 4-wall return on that, but what's your return on my wife buying 6, returning 5, paying no shipping or no return fee? That's a loss. It's a loss every time. No
Mhm.
matter who the retailer is, it could be, that's a loss. Like, and that's what I don't understand. Like, I get that, but the other one could be a real big loss.
Yeah, I think the kind of conversation about web is a little more flexible in that, yeah, you'll see that as a loss, but there's also this element of it building valued customers, right? I'm sure your wife has become a valued customer because she's been able to do that at many locations. And so there's this lifetime, long-term value that they've gained from her. And I think that the conversation around physical locations is still kind of outdated, where it is so traditionally looked at on a four-wall basis that very rarely are people opening their mind to looking at it as on a market level or on, a whole omni-channel
Right.
profitability basis,
Well,
which
the
really,
good news is that at the moment anymore, anyone of scale or like, I don't know, not even a scale, like 10 million or more, there's virtually no online only brands that don't think they need a store. They all believe they need stores now and that physical retail is a piece. So that to me is a really important part. So I'm excited about that. I, you make a good point on that, but like I look at, there's like a couple of retailers where there was one who went public and they were online only. 65% of their revenue came from the stores, and their average stores like 4-wall 30% EBITDA if the entire company wasn't profitable. And so that's how much the drag the online was. I was like, if this was like operated like a small business, like back in the 60s, the simple answer would be, we're not going to sell online anymore. That would be the answer to that business if it was running like the 60s or 70s. We talk about making money. And it's so interesting. We've gone to this other place where it's been about valuation and growing revenue. And
Mhm.
to your point about the funding piece, I think we're going to get back to some basics where profit's going to matter. And I think
Yeah.
that's going to be good for the store, right? When, capital's more expensive than it ever was for a lot of these brands. So I don't know. I'm ranting.
Yeah, that's one of my predictions too for 2023 is that I think brands will need to reach profitability sooner because they're not going to get the investment that they need and they're going to have to fund, store investments or whatever other commitments they have
So
when
like,
they
and I'm
leave.
so biased, I recognize that, but like to me, like profit matters. Like the easy answer one is the store. It costs more. It costs more. I recognize the infrastructure cost, but it's profitable. It's just, and proven time and time again over the course of since the first retail marketplace in Turkey in Istanbul in, before BC or whenever it was when they had the traders coming from the Far East. This is a profitable endeavor. I think there's going to be more. A lot of these brands are going to, I think they're going to go some wholesale too to get to profit. I think that's going to be a piece. I don't know. There's going to be more wholesale. Obviously the Nikes, they're going
Yeah.
the other way. They're going more, but
Yeah, one thing I'm seeing is a lot of like shop and shops as well. So even I was actually just talking to Lunia. I'm going to be writing an article, but they have a rest shop within their store. So they've actually brought in other small brands to help sell in their store. And, you're seeing that across a gazillion stores right now, obviously, like Ulta and Target and Sephora and Kohl's. And like, I think there's just gonna be more and more of that because they want to reach a larger audience and have a physical presence without the extreme capital investment of having their own location.
yeah, it's interesting. Um, I got one for you. This is like my top prediction for 23. You ready for this?
Yeah.
Retail traffic's going to be significantly up. So I'll give you one in 2020 at retail properties. So again, I'm biased, but here's why. So like, you mentioned wait lists. 2022 was like record leasing years, but because of like supply chain, trouble getting building permits, labor challenges, a lot of these stores aren't opening that signed in 22 till 23. We got a huge backlog of stores that were supposed to open in 22 that are opening in 23. And I think people are going to want to check out the stores, see what they're all about. And this isn't being talked about in headline news. And I'm in the weeds of it, and I'm seeing my peers who have all these backlog of signed leases of tenants, like they're just started construction, they're getting close to construction, they're going to open Q1, Q2 of 23. I mean, we signed a lease in the beginning of this year that's not opening till fall of Q23. Um, we just signed a lease with Nordstrom Rack, and they just announced it. We just did a rack deal in our center in Allen, Texas, and we signed it a couple months ago. But we're like working toward that's going on this like everyone's talking about record leasing year 22. That's not opening till fall of 23. So I think there's a lot of that, which I think is
Yeah.
going to be a good thing for foot traffic at properties, which I'm sure you use as an analytic in your analysis.
Yeah. Placer is our best friend.
So
Yeah,
are
I
you a
find
Placer guru? Because
yeah.
if you are, we're obviously we use Placer, but
Mhm.
are you like a guru in the platform?
Yeah, I use it pretty much every day.
Interesting. So uh, I talk to them a lot. I just had a big meeting with them. So we're doing some projects with Placer here. So do you use any other location analytics platforms other than Placer?
Yeah, we use some third-party data that we put into Tableau, and then we use Chain XY as well for just information on store closures and opening.
So one of the things I'm curious about, you're looking at it. What metrics are like you looking at in Placer? That would be fascinating to me. That would be fascinating because I think everyone's looking at different things. There's like a million things you can slice and dice it. What's Brin? Brin's going into Placer every day. What are you looking at?
I mean, obviously, the foot traffic of the center is a huge thing that we know
So I'm
when we're looking
curious
at
to
it.
that, right? So foot traffic, great. So I think we do all the two. When you say foot traffic, are you looking at number of visits? Is that what you're looking at?
Yeah,
So this is a
number
fascinating.
of
I've been in this
visits.
business a long time. And so I first saw this, and then we've been a customer for a while now. And I go, okay, this has 1 million visits. Great. What the heck does that mean? What's it? 1 million visits? It does. If you don't do something with that data, I think like it's less actionable. So you're like, when you think and you look at the foot traffic and the visits, how are you how are you really diving in for it to be actionable or something that matters to you?
Yeah, so I can give you an example. So a
Please.
client, I just I just built their strategy for 2023, and what I did was I just took the traffic of the center, so the foot traffic, but I also took we have attached demographic data to Placer, so we can pull household income, say age groups, um, spending patterns, et cetera, on a radius basis from the trade area of the center. So we take all of that data, and then what I'll usually do, because each client is totally different, is do some like linear regression stuff to determine whether there's correlation. And we actually found that the foot traffic had a very high correlation to their sales, to the top line sales. So we've identified that as a strong metric to consider when we're looking at locations. But that's not the case for every client. And that's why we really do look at different data points depending on, obviously the demographics and the data points that matter that have a correlation to
So
whatever
so
the
that's interesting. So
range.
that makes sorry, that makes sense to me. But you've done linear regression where the traffic doesn't really line up to sales.
Not exactly. Yeah, no, there's sometimes it's very, very low correlation. Um,
Why might
but
that
it's
be?
not. I would say in situations where the brand maybe is not like has a bigger online presence, has a bigger brand awareness in the city that they're in. So we look at sales per household, for instance, for brand awareness, and that tells us that a lot of people in that area are already aware of the brand, et cetera. So maybe the traffic won't be as important because people will be going there as a destination.
Hmm, very interesting. That's interesting. Okay. Yeah, we've done things like where, we have a database of some tenant sales, right? And then you can see the foot traffic and you can divide that out, the foot traffic, the visits per store to get to an average an average uh ticket volume per foot traffic, right? Per customer. And then you can just take that and like when you see or average dollar amount per person walking in, and then you can see like somewhere, okay, this has that many and this is their average dollar amount per person walking in and get to a roundabout sales. It's a very rudimentary way we've done that. But I'm curious,
Yeah.
outside of foot traffic, what other metrics or what other things are you like doing in that program? And obviously it's all based on foot traffic, but anything else in there? That was super interesting what you just told us because I think there's a lot of users of Placer and other location analytics on this listening to this now.
Yeah, so I think, and I wasn't part of this because it was before I joined, but I believe that we got them to put a lot of our third party data into the Placer system so that we can look at demographics on a trade area level of shopping centers. So that's been incredibly helpful because we can say, a 70% trade area around a location has household income of $100,000 or whatever it might be. And that's definitely useful when you're looking at certain clients. We know what their customer demographic is, and we're able to match that up.
Super interesting.
So that would be something else.
um, what are some stuff we can expect you to write about in the near future?
Yeah, I've been doing a lot of features with specific brands. So I'm pretty excited about one coming out in January that I'll just say is with a very prominent DTC brand that was one of the first to open stores. And I think that'll be a really interesting piece with a lot of good information. And then I have a trend piece coming out in January for 2023, probably, copying some of what we talked about today, but that will definitely come out. And then, yeah, I'm always looking for brands to pitch me. If they have interesting things that are coming out, interesting stories. I think there's a lot of exciting stuff that's coming out. I will say, I've been getting so many pitches, like I would say tenfold from earlier in the year of young brands opening stores and then also experiential concepts opening up,
that
just in
want to
terms of
pitch
that
you to
volume,
write
I'd say.
a story?
Yeah, that's how it works a lot of times is they'll send me a message asking if I'll write about them, but I'm very selective. But it does give me good ideas.
Got it. Well,
Mhm.
we are. How did you become a Forbes contributor?
I just messaged them. I used to write on my website. Obviously, you don't get as many writer viewers on there, and I had some experience when I was in university writing for Elite Daily, so they saw that and they saw my experience, and they're like, "We don't have anyone that writes about retail real estate on the team." So there was just an opening for it. I think there's a lot of people that write about retail in general, but not a lot of people that focus on the physical aspect and on the real estate aspect of it.
So I'm like signed up in the Forbes member council, and I gotta write something for 2022, and I've got something. I might send it to you to proofread for me.
Yeah, of course.
um, cool. Well, listen, you got any good holiday plans?
Family stuff, the usual, but I have, like, a week off, so I'm gonna actually work on some of my writing while I don't have work to do.
Got it. Well,
Mhm.
um, I want to take us to the last part of the show. We call it retail wisdom. I got 3 questions for you. You ready?
Yep.
All right. Question 1. What extinct retailer do you wish would come back from the dead?
So, earlier this year or a few months ago, I talked to Vibu, who runs Solana Spaces, and he used to be the founder of Beta, and
Yeah.
I was really sad when I researched for that article that Beta had closed. So I know that's a very fresh one that has gone to the dead, but I would wish that it
Yeah,
came back
it was,
something
they
good.
had a lot of cool products in there. Yeah.
Yeah.
I didn't buy anything when I was in there though. That was the thing. I didn't, it
Yeah,
felt a little sharper imagey to me.
I think it was more of a marketing platform, really. Like that was like a pure marketing platform because it was an experience. You go and then you might go buy something online, but you experience the product in the store in a really cool way.
Yeah. Okay. Question 2. What's the last item over $20 you bought in a store?
I had Christmas shopping, so a pair of sweatpants for my niece at Roots, which is a Canadian
I
fave.
know it. It's a good store.
Yeah.
Okay. All right. Question 3, Brin. And I know they're not in Canada. And for everyone who doesn't know, Brin's in Toronto. Cool city. Um, and I know they're not in Canada anymore, but I ask everyone. If you and I were shopping at Target and I lost you, what aisle would I find you in?
I would say I'm a sucker for home good products, specifically throw pillows or blankets. Probably have way too many of them. Enjoy decorating my home a lot. So yeah, that tends to be my Target purchase. I lived in the States for a long time, so Target was a place I went quite a bit.
Where'd you live?
San Francisco and New York.
All right. 2 great cities. Okay. Well, Bryn, this has been great. Thank you so much for the time. I really appreciate it. I hope you have a great holiday and keep doing what you're doing and looking forward to reading some of your articles. And I I know I got you on the spot, but I'm going to send you to proofread my article before it's
All
released.
right, sounds good. Thank you for having me. Really appreciate it. Enjoyed it. It was fun conversation. And yeah,
So,
happy
Bryn,
holidays.
happy holidays. Before you go, I don't know if you've ever used Riverside before. You see where it says 99% uploaded? After I hit end, you got to wait for
Mhm.
it to say 100.
Gotcha.
Appreciate you watching. Hit subscribe. See you in the next one.